Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 2nd of March. Starting off with 88 Energy, which is gapped up today. And in fact, we've got an island reversal because we gapped down last month and have gapped up to start March, which is a decent sign. We're just waiting for an end of day close through the February peak at 2.8 pence roughly. Above that, then looking for 3.6, which is that March or 1 year resistance line projection. You can see that maybe by the end of this month. Stop loss, ideally there's no breakback below the floor of the gap there at 2.44 pence, but maybe allow a little bit of wiggle room down to 2.25 ahead of 3.6, 3.7 by the end of the month. The whole move higher backed by that bullish divergence line and the double bounce off it that we've had in the last week or so. That the third bounce tends to be the one that gives the big move, and that has actually happened in this case. On to Amala, which used to be called Big Dish apparently, and here we can see that, if I could type in the right EPIC code, here we can see that the signs that the shares were ready to turn around have sort of matured and blossomed in the wake of the latest news. Here you can see that we had a rather ambitious looking broadening triangle there from October, and we were looking for that in the middle of last month, but second time lucky maybe, or maybe it'll have to be third time lucky. End of day close above the 200-day moving average at 0.8 could take us up to the 1.2 area in that October resistance line projection, but obviously this is not the most liquid of situations, but we did have a bear trap gap reversal. We've got bullish divergence as well, the bullish divergence line there from back in January, so that should also help power the move higher if we get that over the near term. But 1.2 maybe by the end of the month could be a fair thing to say, especially given the way that the 50-day moving average is rising. As I've said before, rising 50-day line near the lows tends to be the sign that a stock or a market is ready to turn in a meaningful way. Stock which has already turned in a meaningful way is Deltic, and here we've got a situation where the shares have, we've got a beautiful little sort of handle type move there. I call it V-shaped bull flag, but however you describe it, we've hit the initial target there twice now with this resistance line target that we had around 3.3 pence. 3.5 pence plus on an end of day or a weekly close basis could give us a fresh target here. June resistance line projection heading towards 5.7 or 5.75 pence, and maybe that's a target for the end of next month, the end of April for the shares, but looking very good indeed with that V-shaped bull flag up well above old resistance. The old resistance there around 2.7 and the new support around 2.8, so that is looking very healthy indeed at the moment. On to another stock which has come up trumps for the bulls. Again, another stock which has hit the target. People have questioned my trend lines and my targets, but in this case, the ambitious target of hitting 3p for Egden has come to pass, and now we're looking for really an end of day close above that old peak there, 3.1 pence from last month, end of day close above that. And we could be looking at 4.25, which is an August resistance line projection. With a golden cross there in the middle of last month, that gave us the run up to that gave a decent move to the upside, as it very often does. Hopefully this is a mid-move consolidation ahead of a move up to 4.25, maybe as soon as the end of this month. Another cracker here with GCM Resources. I think people looking for the next coal stock. Obviously Ben's Creek has come up trumps of late. Here it looks as though we're in the run up to a golden cross, and obviously we've already seen the big move. Also we've seen the shares hit my resistance line target there around 10 pence and come back below it, but at least while we're above the old February resistance around let's call it 8 pence, we could easily have a retest of today's best levels around 12.6 pence. If you're a fan of the shares and looking for how high they may eventually go, I would say that a line of resistance probably from back in October 2020, heading for 21 pence, could be the 2 to 3 month target here. Obviously, while we remain above the 8 pence area. I suppose if you're a long-term holder, you might want to risk down to 7 pence. That wouldn't be too much of a strain, given that 21 pence could be the potential broadening triangle target there for GCM, looking very interesting indeed. Covered Jangada a few days ago, and 4 bounces off that 5.6, 5.7p area. We also had the third bounce off the RSI resistance line from back in November, the bullish divergence line. Current situation is that we've managed to clear that initial February resistance around 7.3 pence, and a weekly close above that should easily get the shares up to 9.5 pence at the top of that rising September trend channel, and maybe we could see that by the end of the month, and the way things are going, maybe even by the end of the week. One of the new policies for the Bulletin Board Heroes of late has been to repeat the best stocks again and again, so that people obviously don't miss them. Here we've got i3 Energy, which has been, I suppose, second to Ben's Creek in terms of being a reliable performer. We've had the big breakout through the old July resistance at 16.8 pence, had new support there at 17.9, and old resistance, or new support rather, coming in above old resistance tends to be a very strong signal. We obviously don't need to tell you that at the moment. Target here as high as 31 pence over the next 4 to 6 weeks for i3, obviously boosted by the soaring crude oil price. A bit of a wobble in Kistos from the December peak, the sort of December-January peaks above 440, but it looks like that's been shaken off now. I've had a double bottom there at the floor of that rising trend channel from June, and the shares have gapped up today towards the 50-day moving average. The last peak in February was 392, so an end-of-day close above that could be all that the shares need really to head up to the designated target here at £5 at the top of that June trend channel, maybe as soon as the end of this month, given the way that we've gapped up today. And the RSI very modest now, just over the neutral 50 level, so plenty of gas in the tank for the shares after the bear trap from below the November low at around £3.35. So I think those who are concerned about Kistos may not need to be concerned anymore. Marichal has come up with a fundraise today. It obviously has the sizzle of having Luke Johnson involved. Here we've got a rising trend channel in place since July last year. We've gapped up off the floor of that channel, and we also found support above the 200-day moving average at 0.49 pence. At 2.49 pence. Above that, looking for the top of the channel there at 5.5 pence, maybe by the end of next month, something like that. And I suppose if you're cautious, you just wait for a clearance of the February resistance around 3.55 pence. But it looks as though with the gap higher today through the 50-day moving average, the shares are ready for a new leg higher, especially given the fundraise that we have seen. On to Open Orphan, which seems to be ready to take its show on the road in terms of the new CEO there. We've been looking for the floor of this triangle for quite some time, and it looks as though there may be a chance that we've actually finally hit it now, with the low yesterday around 12 pence, or just above 12 pence, 12 and a quarter, that kind of thing. That RSI support line looks as though it could give the shares some momentum. If you're cautious, maybe wait for an end-of-day close about 13 3/4, which was the last floor for the shares in February, and then above that, then we could hit at least the 50-day moving average at 19 pence, which from where we are now would be a decent result over the next month or so. No such qualms in terms of the bullish argument at Rearbold. Still making progress within that rising September trend channel, which has its resistance line projection heading towards 0.5 pence. That could be hit by the end of the month, especially while we hold above recent support. Yesterday's low at 0.33, so above 0.33, looking for 0.5, backed by an RSI uptrend line there, and still looking pretty strong with that flick higher that we've had for the stock today. Now, a lot of people are watching tertiary minerals, hoping it's the next big mover. Good news here is that we are bouncing off this RSI support line, done that 2 or 3 times in the last week or so, and we've broken that major trend line, resistance line there around 0.2 at the beginning of last month. sideways action since then, but the real secret sauce here at the moment on the technical front is the way that the 50-day moving average is rising. That suggests that there is a positive momentum building, and we could flick up to the 0.3 pence area maybe as soon as the end of this month. Finishing off with Union Jack, and a stock where I highlighted the bear trap gap reversal from December. That was through 12 pence, and then we had the rising 50-day line, which I suppose from the middle of last month started backing the stock. We hit the target, or the top of the rising trend channel, which is very satisfying. Was very satisfying at 26 pence. Could still head up to 28, maybe over the next couple of weeks. And the only question here, I suppose, if you're looking for further gains, which we should be on alert for now, we could extend that trend channel or resistance line up to 36 pence. So above 28, looking for 36. Maybe over the next 1 to 2 months on Union Jack. Stop loss at the moment back below 22, which was turn of the month support for the shares. So above 22, looking for 36. Ideally, there's no break back below the 200-day line at 23 pence. That's it from me today. More updates tomorrow.